All right, live and recording. So, on the menu for today, let's have a look. There's the questions. Maybe on the 4 hour, we can see it more clearly. Where the heck is it? Where did it go? Okay, we got it. Um, Frequently asked questions. Oh, well, not just about prop trading, but also about prop trading. We have also Sonder class, which is very proficient at it. You asked me, you can only have one evaluation going, at least on breakout. Okay. Um, you cannot have like 2, 3 evaluations open at the same time. You can have multiple accounts, okay, but not more than one evaluation. Like 4 people asked me this week, so it's probably something that many people are interested in. For prop trading, only one, okay? So I want to get this out of the way so we can move on. But one evaluation only on breakout. Multiple funded accounts is fine as long as you don't have more than $200,000 position open, okay? So you can trade multiple at the same time, different devices is all fine. Just don't go over 200,000 total positions open. I don't suggest you buy the $1,000 evaluation right away unless you know what you're doing. Build it gradually. Start from the smallest ones, like the 5,000 or 10,000. Only trade A plus setups. Okay, it's okay to take one trade per week. It's fine. It's also okay to scalp, but you want to have tight stops and a good risk reward ratio. Okay, in your setups because you have a maximum drawdown. Is it for everyone? No. Like, if you just started trading, you're better off trading with $50, $100 until you're consistent, and that will show in your P&L, okay, as a percentage. Like, look at the percentage growth and look at your bad trades, how much you lost. You want to control that part, okay? You want to control the losses. So if you can do that, then by all means. It took me years to build a decent account for trading. If we had prop firms when I started, probably would have been easier. Okay, so that's it. There's breakout, we're partners. There's other ones. There's a MCF. There is also K, I believe, and other firms. You can choose. Just these first 2 points are valid for breakout. I don't know about the rest. So only one evaluation at the same time, but multiple accounts are okay. So if you pass an evaluation, then another one, and then another one, it's fine. Just don't go over 200K positions. So that's it for this part. Additional cues. So how to organize a chart and tools. It depends. So on Kiyotaka, I have different workspaces, okay, a lot of stuff, because it's the best way to organize it in Kiyotaka. Different way to organize your work. So there's one for ETH. There's going to be one workspace for ETH. There's another one for scalping. There's another one for profile. That's my home. Is the market profile. So you keep it separate on Kiyotaka. Okay. You have all your tools. For example, here I have all the sessions I'm interested in, and all the indicators that I use when I do market profile charting. Okay. Let's say if I scalp, I'm going to use a different chart altogether. Okay, that's the system that you use on Kiyotaka. Okay. Oops. Okay. So I'm going. This one is for like lower time frames, so that's why I have a lot of lines, and I have all my levels charted in this one. If you use let's say, let's keep the profile here. Maybe we need it later. If you use TradingView, okay, you have an object tree. Maybe it will come to Kiyotaka. I think they're working on it. So this is the way I organize it. You have your own indicators, and then you can make folders. So something that is more relevant in the lower time frame, okay, LTF relevant, higher time frame relevant. That's how I do it, okay. Live stream slides. I have my fibs organized here. You can just hide and show all together or do it one at a time. Developing higher time frame, for example, to just keep an eye open. So if I go, let's say, on the weekly, I will hide this part. That will have, let's say, this is very high time frame relevant. I'm speculating maybe we get an head and shoulders here. And also, let's say, I have a local channel charted here. And I check things independently, okay? That's what I do. And finally, I have temporary lower time frame drawings. Let's say it's maybe on the 1 hour, or even better, probably this one on the 30 minutes or the 5 minutes. Yeah. Okay. And this stuff is temporary, and this folder gets emptied every time we finish. We get out of this zone, for example, or get out of this zone. I had more. I deleted most of it. I will keep this just in case. And now this is the local area, the local levels, okay? I might add some stuff, but this is something maybe I'm looking at trading depending how it behaves, but we are also forming, let's say, a flag here, sort of, potentially. So we want to check what happens here, right? We don't know, just put everything in the folder, and when we don't need it anymore, we just empty everything. That's the way I like to organize my charts. You can do whatever you want. I use also Kiyotaka because the tools there are more quantitative, and you also have everything free, market profile, volume profiles. If you're into prediction markets, you also have all the prediction market area, so with Polymarket, and maybe they will add Kalshi later, but now you have Polymarket going on, so it's cool. It's very data based. TradingView, I'm not a big fan. I used to use ExoChart for a long time, for like maybe 5 years. But I think now I can feel my needs for the type of tools with Kiyotaka, which is also free. ExoCharts can be quite expensive on the higher plans. And for the rest, I use TradingView. Okay, I haven't used it in several years, but I think these two complete each other, and with an edge with Kiyotaka. But also Exo, if you like it, is very good. I'm a big fan of Exo. It's just at the moment I'm satisfied with Kiyotaka. Maybe one day I will also add Exo charts again, because I kind of miss it sometimes, because there's a couple of things not present yet, either on TradingView and Kiyotaka. So maybe later on we will have a look at Exo. Anyways, specializing and session types. Okay, I don't see anyone talking about it extensively, but due to my market profile, let's say, education, like the one I gave myself, I like to define sessions by types. Okay, we're going to have trending sessions or lateral sessions. Okay, of course, it's going to be more clear here, but for example, this is a very lateral session. No, this one is actually trending. Right? Okay, we got it better here. Okay, here we have lateral sessions, especially on the weekend. Okay, market is flat, or you have something like this that is flat, like this Asia session. It's mostly flat because there's a very small delta, and you're going to have trending sessions, okay, where you have a defined trend. And your approach to it will change, okay? As in the safest ways to treat a trending day is do not fade the trend, okay? What you're going to look for is a re-entry, okay? So let's say I'm on Asia, okay? And at some point, we break structure, and we're going to look at it later. But if we break structure and we start trending lower, I'm going to look for a re-entry, okay? So as soon as I get a lower low, maybe some time will pass, but I will try to get a re-entry so I can be inside the trend. The same, the opposite is true, okay? When the downtrend breaks, at that point, we want to get out. So as soon as I see that the market structure breaks and I don't get a lower low, I will try to get out on the next low, probably. This is more of a day trading situation. Or when the market is trending up, we had some days like that, like here. Okay, near a session, we open, find the bottom, and then we start trending, okay? And same thing, you will want to find an entry on a higher low if possible. But here the entry doesn't come in until later in the day. And these are 5-minute bars, okay? But that's going to be your re-entry ideally. If you do it on the 1 minute, you might find another re-entry, okay? If you see that the bars are this is a very strong trend here. So almost every bar closes above the other. You might have a look at the 1 minute chart at that point. If you have a more relaxed trend, then you will find an entry point a little bit earlier. When you have a ranging market like this, okay, you will try to fade the extremes ideally. So you will wait, right? Let's say here we open on Asia at 9, but the channel has been going on for some time already, right? So we had a give me a channel. So we have you need 3 points to identify a channel usually. So this is going to be your high, a low, and when you get another high, you can either fade it here or you will fade the next low, okay? And you will trade the channel until it breaks. So here is breaking, you will get out. If you're in a long, you will get out here. That's a very narrow channel here, so maybe it's not the best to trade on this time frame, but you get the idea. You fade the extremes and you want to probably get out. Once you don't make it, people start front running this, and we might expect a break in the other side, right? So this is not a break actually, because we don't have a big confirmation on this side. So if you actually long it, it's okay, But here's your sign to get out because you see a sharp rejection, or to fade it in the other direction. Okay. But the mean reversion strategy is what you do in a channel. You need a little bit of patience. You can set an alert, but it's the same as everything, right? Like, let the market come to you, says Jim Dalton. And we should all listen to Jim Dalton and whatever he says, because the guy has been on the market for 50 years. Okay, what next? Okay, there it is. So, market structure. Someone asked me how to identify market structure. I already said, like, higher highs and higher lows in a trend and re-entry. Of course, the higher the time frame, the harder it could be to identify it, because it's not that clear, especially when the market is nervous. So when you identify, you have, like, let's say, want to find, but no, I don't want to find an easy one. You have to see the difficult ones. Let's say in a downtrend like this, okay, when we break this little channel here, okay, we have a little channel and we break it and we establish a high, okay. This high is not taken. We have a lower high, okay. So lower low, lower high, lower low. If we set a lower high again, you will try to fade it, okay. Just wait for confirmation. Don't jump in on the candle open. It's not necessary, okay. You can wait until the trend is confirmed, or you can fade the top of the other candle. As soon as you see a reversal, you will look into a short here, okay. That's when you try to get in on a trend. Don't fade it. Of course, these are 4-hour bars, but if we're day trading, you will have many chances, right? Like, and in different sessions, so it's okay. You can also look at orders, okay, at limits. Where are the limits when we're here? You can use a heat map on Kiyotaka, for example. See where there's a cluster of limits. Remove, of course, the spoofing, but that's a good way to get back into the trend. It's like trading the extremes of a channel, in a way. It's just that this time the channel is inclined. And then, of course, when usually trends end like this, with a big dump or a big pump, okay. We can have a look on the lower time frame, but that's your signal that we will find the bottom generally, and it's a break of structure. It's followed by another break of structure, because here we have a clear structure identified, let's say in a channel here, okay. We start breaking structure, but we still have a lower high, but this doesn't look like a controlled move anymore. And then you have a break of structure here, because we don't set any more lower lows, and that's where you close your position. If you get in at any point here, you will have made a profit. Don't get in on these accelerations, usually, because it's really hard to predict where it will bounce back. It could be here, could be here, could be here, okay? Market is still going to be there tomorrow, so just don't be silly. Market is always there another day, and especially if you're a prop trader, And the successful one, you know it. So what's an A plus setup and what is not? This is not. Like getting in here or here. This is not a setup, okay? These are setups, if you want. This is a setup. But this thing, jumping into the breakdown, this is never a very good move. You will find a setup here. Again, you can position here if you see a cupping. These are all setups, okay? Like a technical analysis trader will look at cupping a lot and see a break in a direction or the other, depending on other factors. So you can, someone asked, that's also why I got into this. Someone asked, is there any indicator for market structure? The answer is yes. It's this one. I saved it before. It's going to highlight when you get certain signs, okay? Like you have a lower low here, but like lower highs, it will highlight lower highs and lower lows on the time frames, okay? And it's going to give you a break of structure. This is not super precise in my opinion, okay? Because it's not always easy to understand to which structure it is referring, but it's going to give you some metrics, okay? Leviathan also has another indicator that will give you the day's range, which is also good. I think it's key levels, it's called. It will give you the day's range, which is another interesting tool, in my opinion. Do we need all of them? No, but whatever floats your boat, right? Especially the daily levels, you can use an indicator. For break of structure, I suggest you learn how to identify it by yourself, because it's going to pay back in the long term. Then analysis. I didn't write anything in the analysis. Okay, no, I did. What is it? Not showing. Where the heck is that? Okay. Yep. All right. Okay, let's start from, well, this is a little bit needs introduction. All right. So on the 4 hour, now we had a significant breakdown here. We had an uptrend in this department, few days, good swing if you got it. We formed, was not really a range here, okay, because we topped and then we proceeded to break structure with this new low, okay. So we broke this uptrend. We could consider also this as a break of structure, depending on which time frame you look at. We look at the 4 hour, but we can look at the 1 hour, okay. So you could see a break of structure here or here, all right? There were some trades here to take this range and then very compressed range until Asia open. And then Asia proceeds to dump it preemptively, because if you have access to any news outlet, these days have been quite entertaining, I would say, okay? So what do we have in these time frames, okay? We have a few levels that have been respected historically because we are in a range. Okay, guys, we're in a range here. There's a very long range. It started in November, end of November. And it's going to be this range here, right? So fading this range, I talked about it many times, just fading the tops of this range pays a lot of money. Of course, not, I wouldn't consider this one a top, so it's not my favorite. I was waiting for this setup for a long time. I fat fingered my way out of it too early, but it's fine. Okay. And now we have different options because this is a situation, something that was very well respected here was a Fibonacci. Okay, look at this one. It's a perfect 0382 and 98K, right? We didn't make it there. We were rejected, which is not a good sign. But again, until the range breaks, we can trade it. However, we also need to consider that maybe there's a different option here, and is a fib that doesn't start from the all-time high, but starts from the last swing high here. Okay? If this is the case, well, we held above 0236, right? I mean, these Fibonacci retracement has been kind of respected, and we were rejected at the 0618 golden ratio, right? So if we can regain 0382, then why not? We could expect a move up here. Am I bullish? Not at all. Am I going to long this? I doubt. I'd rather fade the top. However, we don't have much below us, okay? We have a lot of levels above, and some of them might get washed, especially if we see volatility increase, and I will show you how. What's an hypothesis? At that point, we have 84, and if we flip 84, we have 80.5. But flipping 80, then we already go lower, in my opinion. What else? So here we can take a look at this Fibonacci in case we take this last swing high as a start from the movement. And it's not easy to find a bottom here because we have this fuckery, this thing here, okay, on the 4 hour. So you could also trace it here. In case we don't count this as as the last hit of the swing. We didn't get a higher high here, or maybe we did, depending on what you're looking at. Elliott wave traders must be very happy with this price action. It's ironic, of course. So let's take this level. And we're floating above 0236 here. I mean, it doesn't go against the rest, okay? It doesn't go against the rest. So that's why we're having a look at it. And then we might look at regaining this level here. So basically, this support resistance to a Fibonacci 0618. But beyond that, it's nasty. However, you see where 1618. So above the 100% retracement, we have another golden pocket here, or golden ratio. So an attempt to this will match probably the channel at some point. Okay, like attempting to go for 104. So these moves take months, so why not? But it's a little bit too far, in my opinion. Especially because we are considering this one. So the moves don't go too far beyond in time. Probably by the middle of end of the month or something like that. So it's unlikely, in my opinion. Then, of course, if we flip these levels, by all means, I'm going to be bullish, but I don't think we're making it to these levels in a healthy way. There's another option, and then we're done with Fibonacci's, and it's it's this one, taking the previous, and this is the bearish option. Okay, taking this one as a trend and this one as a retracement. Okay, in case of a bearish continuation, and it matches 84 on the extension. So if we keep pushing, this is going to be the key point for continuation, all right? Because this is the 1.618. It sits around 84. That's why I wanted to show you taking the Fibonacci from this swing low to this swing high. And that's the bearish option. We don't make predictions, we play chess, okay? We calculate. So we are ready when it happens. Because we cannot predict, but we can expect some more likely scenarios and trade them if things go our own way. If they don't, that's fine. We sit and watch. But by planning 3, 4, 5 scenarios, of course, reasonable one, don't force it, then you have trades to take. All right. So let me see if I have more. Channel highs, channel swing high. Yeah. So what's the swing high? Again, you could fade the swing lows, but in my opinion, it's not the safest thing to do. Unless you can really catch the bottom and set a very tight stop. Just because, yeah, we trade the channel until it breaks, but this is a very big channel, okay? So moves hurt much more when they happen here. If we break the structure, so if, for example, we don't go set a high, but we set a low here, then I don't really like it, right? So you want to play it safe. It's much easier to short these stops at these levels. They are always very well respected, guys. Like I set this level at this time, it was respected here, it was respected here. Look at this flip. Look at this flip. It wasn't on Kiyotaka, but same. I set the same levels here. But if you go and watch my old videos, these are the same levels. Okay, if you watch like New Year's Eve, or when was it? These levels were mostly here. So, yep. I will wait and see if we flip it. And then you could trade level to level if you see something nice like this price action here. Very nice. We test it, we retest, go through. So of course on a lower time frame, the price action is going to look much more controlled. On a lower time frame, you will have something like this between two levels, so you can retest and re-entry. Very easy. All right. I mean, very easy. Much easier than trading things on the 4 hour, unless you're looking for a pico top rejection then it's going to be cleaner here. But if you want to trade level to level with these are days of range, okay? Because 4 candles of these are a day, so you have all the time to get in once you see a trend is established, right? So if you're here, maybe you're like, okay, let's see if we take this level, we reject, we can short it and scalp short. We can just wait, see if we take it and swing long here. Okay, much easier to do. But of course, you can always scalp the 5-minute chart. The article, maybe tomorrow I will be able to finish one, and there's a scalping course going on, also videos. So there's a lot of things, and of course, like, articles are always the basics. So make sure you check them out. But yeah, you have a lot of setups here on the 5-minute chart. A lot of free entries also for the higher time frame. And what else? I think that's pretty much it for today. So, yeah, that's pretty much it. So if you have some questions, I will give you 1 minute to type some stuff. And if you don't, I will just end the streaming and upload it on YouTube so other people can watch it later. Fried charts on the menu. Yeah, deep fried charts in this case. Yeah, it's a good platform. Kiyotaka, so very good. Let's have a look at profile. Wow. Give you some time to come up with some questions. Just in case if there's something interesting here. The single prints were filled. We have a decent low. And this one, it's a double distribution day on New York. It's a P-shaped here. If you look at the volume profile, okay, the visible range as a P shape. In this case, it might suggest the longs are unwinding here, okay, especially, you know, the knife catchers, okay, these buyers here might be unloading inventory again. What else? We have a gap. It's not very pronounced, but we have a poor shape here because we always want to have sort of belly. Okay, that's a shitty belly. Let me make a nice belly. So you will want to have a profile shaped this way, okay, like evenly distributed. So this one has a very poor distribution, okay, especially because if we merge it, we have a poor high probably on these ones, these two guys. Yeah, no. Because it merges on New York. Let's see if this TPO here. No, okay. The high is okay. There's a very fat belly here. So we treat these two as separate days, even if we don't have single prints in the middle. So I would identify a gap in this department here. Okay, very low volume. And price didn't really stay here long. It's more just a transitory move between two periods. So period E and period J, okay? Because we open here, we are rejected, we drive lower, we fill these single prints, okay? So we repair this poor structure, and then we drive higher, and here we start finding cover, okay? So we're unwinding the positions. If you merge these two profiles, it doesn't look that bad. It actually looks like a very well distributed move. But I want to see what happens with New York here. So if we can break above this value area here that we've had for a few sessions, then things are not looking too bad. I might go and repair this one too, okay? And here we have single prints again. We have single prints also on the pre-close session, okay? So which I don't really chart, but in this case we need it. There's a lot of single prints here. So yeah, let's see if we can really break above this value area, and ideally, you know, we're floating around here. So we'll match with a little bit of confluence. We'll probably match 90.5 as a range. If we find support above it, we test it, then we can start thinking that we can repair this and retake a higher value. But if we break below this value area, and I would say these very consistent value areas here getting lower, so I would set this value area as a point where we should be cautious because we could drive lower. Let's see what New York does today. There's a lot going on, news all over the place, statements all over the place. So let's also see what the news are, because maybe some backtracking on the most aggressive statements by all sides involved might cool down the situation. But there's threats of, you know, there's some European countries started selling US debt, and that doesn't look good. So let's see how it goes. Dwarf Mage asks, I have trouble with news-induced price action. Yes, sir, I can imagine. I can't make sense of it, so I prefer to wait a day or two for PA to retest. That's very sensible. That's very sensible. May I introduce you something? Where is it? Where the fuck is it? It's a new tool from Kiyotaka. Wait, let me get a new workspace. Let's see if it shows up. Test. There's something very cool. I just want to see if it's, because I saw it today, but then I switched it off. It's basically an indicator that tells you reaction with news and everything. Oh wait, what's going on here? Okay, let me see if it's on. Because it was on by default at some point. I'm not a very proficient user of interfaces, as you can see. Or the boot delta RSI. That's not here. Maybe the screen. I was not on Polymarket. But anyways, there's a way. Just check it out. They made a new uh, post on X. I had it installed and I removed it because it was bugging me a bit. I didn't want to have it, and I don't know how to find it again. But you are able to find it, and that will help you read the news, how markets are pricing it. But best way, in my opinion, is don't fucking touch it when you're expecting news. Same as CPI, FOMC, CLI, Davos, especially with what's going on in Davos now. Just you don't need to trade, and most of it is in New York session. So you can just wait, and ideally 90% of you can trade 2 sessions. So just take it easy. Just take it easy. So I mean, these are news, guys. This fuckery here. These are news. This is politicians speaking. So you don't need to trade it. It's fine to sit it out. That's what I do most. If market makers sit out when you have news coming, I don't see why we should do any different. You can sit out unless you're already in a position and the position is in a profit, so you don't give a shit. You don't need to open a position on news day, news time, because if you have a look at the books are going to be very thin. So the spikes here, they happen because the market makers turn off their engines and wait for the storm to pass, and then they will come back in. So if you're in a trend here, let's say you're a genius and you sold the top, okay? Then no need for concern, right? All this volatility here, which is sometimes news-led and we have less liquidity in the books, but the trend keeps going, okay? Conversely, if you're out, maybe you don't want to open a position here or here or here, wherever it goes, right? Because if it's a short position, maybe you're right, but where do you set your stops when you have this V reversal? And I made a video yesterday about how to trade these V reversals, okay? But the principle is that we don't catch this knife, but we try to catch this continuation. Liquidity shock is a different event, and then maybe we can capitalize on this too, okay, and catch the knife. With V reversals, we don't want to catch the V. We want to catch the top and the continuation on the big trend. So when volatility ideally will go down again. So there's this, where you can get inside and let it run until you get this thing, okay? Higher high compared to this one. I never give up. He asks, is there a way to connect breakout to in silico? I love the terminals, so don't want to trade anywhere else. And Vic asks, is in silico free? I will answer them together. So no, prop firms, they're not integrated with in silico, for very good reasons. The platform is free, as Vic asks, but they make money taking a commission of the fees, okay? So they only integrate with major exchanges and like decent ones. So you will not find shit exchanges there, or exchanges that have a weird policy on APIs. They're only exchanges they make a deal with and they can trust and users can trust. So breakout is not that you cannot trust it, but they don't give commission fees to anyone because they're a business and their commission fees are quite low. So the point of a prop firm is that they take a percentage on your wins. And they themselves, well, now they're acquired by Kraken, but they mostly trade on an exchange, so they need to contain costs, and they cannot give APIs for trading outside the platform. Not at the moment. So maybe some other prop firm, not that I'm aware of, because everything is listed, but maybe you can connect to a different terminal, not to in silico. But it doesn't matter, because you will, if you trade a prop firm, I doubt you will scalp. Okay, with breakout you could ideally, but 90% of users on a prop firm, they're better off not trading the 1 minute chart. Okay, so they're better off only taking really A plus setups on the 4 hour, on the 1 hour. Because okay, if you trade a $5,000 account, which is like a $60 evaluation fee, then no biggie. But I assume the goal is to grow and go to, let's say, a 100K account. With a 100K account, you need one trade like this per month, okay, to make a living. Okay, a 100K account is almost 10K that you're bringing home. Of course, don't start from that one, but the meaning of it is you can just trade one time or 2 times per month, right? You need like to trade very few times, the least the better. Okay, so most of the people will do better to only take these setups when they're trading a prop firm. If you're an experienced trader and you're a scalper, you can scalp the 15, the 5 minute, then it's fine. But you don't need the 1 minute. So I think also in silico for a prop firm is overkill. Is overkill. In silico is mostly born for high frequency trading or advanced trading types, which is something you don't really need in that type of portfolio, given the structure of it, and given how locked in your positions will be, because your stops will be very tight. That's why only A plus setups, okay, only pico tops, because your stops cannot be 3%. Your stops cannot be 2% on this trade, right? Like your stops will be okay. This is the 1 minute chart. Let me get you a 4 hour chart. So ideally, okay, a trade like this, and we talked about it several times, so it was not unexpected, this trade. Let's say you get in late, but yeah, 0.5 stop. So you get in on this candle here, okay, not here, but on this candle here, so you can catch a safe stop just above it. This is the sort of trades you take on breakout or any other prop firm, because you cannot afford to fuck up many trades in a row, so you want to keep your stops tight. An A plus setup is a stop that you're like, okay, my invalidation is here. It means this is not a pico top. And the upside, I don't care. I'll let it run. And I will not move this stop for a good while. That's the type of trades you take. So you have to be patient and trade only once in a while. You can trade with smaller accounts, and scalp and do other things on a smaller account or on the terminal, let's say. I don't know if you do Binance, Hyperliquid, Blowfin, all good. And this is where, when you open breakout, when you're around here and you set alerts and hope you're not sleeping, and open your trades. Okay, it's not impossible to take. It's like, especially if you do level to level trading, it's not that hard to take. It's like when it starts peaking above, even if you do it here and you see it's reversing, fine, it's not the pico top. I just close my position when it's reversing, take my few dollars, and do it again. You can do it on any sharp move here. Okay, but there's going to be only few ones in a while. Okay, but these are the setups you want to take, like confluence on a major level, and a rejection, and then you short it. If we don't go lower, anyways, we're going to trail our stop, and we're going to be in a profit. But here, your stop is going to be super tight. Okay. All right, since there are not many questions and we're hitting the 1 hour mark, I think I can call it for today. Marcus Reed. Okay. And thank you guys for coming. The next stream, yeah, no worries. The next stream will be Sunday, a little bit before New York Open. That's actually Sunday, so New York opens like on the Monday, so it's, but for me Sunday night, so it would be like probably 1 p.m. UTC on Sunday. All right, guys, thank you so much for coming. Bye bye.